What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is June 15th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to be talking about the price action of the indices. Price action, I think, had a lot of people frustrated today, so we'll go over that. We'll go under the hood and check out our sectors and style factors. Talk about some of my trades for the day, and then we'll wrap up with options order flow. Before we jump into all that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. Oh my gosh. I'm about to sneeze. Okay, no, I didn't. All right, so let's jump into it here. So today I've been talking about this. If you watch my videos, you know I've been talking about this FOMC meeting that was coming up and a lot of these binary events that are approaching us in this trading month. And, yesterday, if you watched my recap video, I said, hey, I'm going to pull in a bunch of my options exposure because we don't know what's going to happen. And, these institutions, they also don't know what's going to happen. So a lot of times they take some profits. And that's what we had today. So we had S&P 500 down 0.18%. We had the NASDAQ QQQ down 0.65%. We had the IWM small caps down 0.29%. And we had the Dow Jones down 0.26%. And I think today definitely caught people off guard because what tends to happen is, for the growth stocks, for instance, like when the growth stocks are all getting super cheap and reaching all these like crazy buy points, it's like, oh my gosh, these companies are so good and I get to buy them on sale. Nobody wants to buy them. But once they've been running for a couple weeks, like they just were, it's been a really nice sequence. Like if you look at the S&P 500 from May 18th, this has been a glorious little run here. Once things run for a couple weeks, then everyone just completely forgets they can go down again. So S&P 500 here, you can see this wasn't even a bad candle. So we're still above the 5-day EMA. We're still above this monthly value area. We're actually still extended from this 20-day simple moving average. So yeah, this is, just a little hesitation before the Fed. Nothing too crazy. Let's go to our hourly chart. And you can see we tagged this weekly value area high. We actually dipped into the weekly value area and we bounced off of that. So it functions as pretty good support here. Let's jump over to our NQ because what we saw was this morning we had a weak retail sales number, and then we had an above expectations inflation number. So I think that's what sort of derailed a lot of the tech stocks today, just because the tech stocks were very extended. Like look at the NASDAQ, how far it is away from these simple moving averages. And this is a really good point to bring up. When you're extended from the key moving averages, that's where even the smallest little blip in terms of news can take the market down a little bit. There's nothing wrong with that. Really what it is just, if you're buying down here on the tag of this 20-day simple moving average, that's a great entry point into stocks. Typically when you get these shakeouts, the shakeouts don't really shake out the players that bought down here. They shake out the weaker players, but not as savvy players that were buying everything up and pigging out yesterday. So you can see here we were down 0.65% in the Qs. Again, we're still above this 5-day EMA. So this really is nothing. But off of that bigger than expected inflation number, we had some rotation. So we had some money move out of the Qs and into the cyclicals once again. And it was really just a partial reversal of a rotation that we've been seeing into growth really for the past, 4 or 5 days straight. You can see small caps down 0.29%, still just consolidating here. And we had the Dow Jones. Dow Jones still doesn't look good. You can see we're trading below this 50-day simple, or below the point of control, and we're dancing around this 50-day simple moving average. Yeah, let's close this out. It's already printed this stuff off. Okay, here we are. Right here. All right. So when we look at the market breadth, You can see S&P 500 breadth was actually positive even though the market was down. And the reason for that is because, it was the tech monopolies essentially that took a hit today, but a lot of the other stocks did pretty well. The more inflation sensitive, consumer cyclicals, etc. And then we had weak breadth in the other indices. The Qs had the worst breadth. You can see when we look at our heat map, Tesla was down almost 3%. We had Apple down, Microsoft down, Google, all these tech stocks. So you can see the semiconductors were down as well. And then a lot of these areas that over the past 4 or 5 days had taken a huge hit, they bounced a little bit on the inflation data. So it's kind of just like, if you really got like punished by the market today, that most likely means that you were very slow on this rotation. And, you were adding a lot of exposures, on like day 4 or day 5 of the move. So that's just something to keep in mind. But yeah, definitely, when you see these growth stocks, take a huge hit, never a good feeling, but this may be reversing like one day of positive price action. Looking at our sectors, you can see like ARKG was down 2.33%. ARK was down 2.74%. Keep in mind, these are both at the top of our momentum list. Meanwhile, a month ago, these were the sector ETFs everyone was saying was going to blow up. So it just goes to show like how quickly we can go from like this is never going to go up to it's never going to go down. Then people are surprised when it goes down. So it's just interesting. Then you can see KRE, the regional banks, they're at the bottom of our momentum list. They got a bounce today. And what else here? You can see energy stocks remain in their bullish trend here. XLE up 1.9%. And then in terms of style factors, you can see the same dynamic. Cyclicals were up 0.25%. High beta was up 0.21%. And then you can see worst performing style factor, momentum, and growth. So this was just really like a rotational little mini sell-off ahead of FOMC. And it makes sense, like, heading into FOMC, these institutions, they're not like loading the boat today on stocks. Like today is, if there's any hesitation where they might trim something or just not really be that active. All right, in terms of my trades for the day, I tried not to be super active today, but I did make some adjustments. So let's pull these up. So one thing I did, these are my common stock trades. I got long MicroStrategy common shares at $9.50 for $602.95. And I said here, made this a core position. I think the cryptocurrency market is getting so interesting right here. I honestly think the cryptos, so the thing is, they're not setting up perfectly from a technical perspective. And so I think a lot of the technical traders, they're still on the sidelines. But for me, when I look at the big picture dynamics going on, I'm like, these things just crashed 50%. And now they will not go down any further. I posted about this on Twitter. But yeah, like Bitcoin, let's pull this up. Bitcoin. Over here. There it is. So Bitcoin. It had made this low, capitulation low, on May 19th. Ever since then, it never made a lower low, and it's just been basing ever since. So I'm no, dummy in terms of this price action. Watch, we'll, go to this video in, 2 weeks, and Bitcoin will be, at new lows. No, but for me, when I see something that to me is, one of the most asymmetric opportunities in the market, and everybody's getting super bearish on it, but it's actually not going down anymore and the price action is tightening, that to me is a really good opportunity. So for me, I actually cleaned up more of my exposures today and I got more concentrated in cryptocurrency exposures. And a lot of times when I do these things, right now, this is a no-no to say. You can't say that. Bitcoin has been going down. You can't say that you're getting long. But then if tomorrow, this thing is up 5%, then it'll be oh gosh, everyone on Twitter got long on the lows or whatever. But yeah, Bitcoin, you can see we had some heavy resistance here at 40,000. And right now we're just kind of hovering on that resistance. We're getting a nice little consolidation day. But I do think this could take some players by surprise and we could get a quick move up to this 46K. And then suddenly, everyone who did not buy down here in the 30s is going to be saying, oh my God, I missed the bottom in Bitcoin again. And they're going to be, honestly, I think there could be a FOMO situation. So we will see what happens. But yeah, I think this is getting super interesting. And I think a good way to play it is MicroStrategy. Look at this wedge pop setup right here. MicroStrategy is looking really solid. Pretty much what they're doing is they're raising debt to buy Bitcoin, they're raising equity to buy Bitcoin, and they're going all in on the asset. So it's going to be a make or break thing. If this asset does really well, MicroStrategy is going to do really well. If Bitcoin does poorly, MicroStrategy is going to do poorly. So I picked up on the open. I was like, I'm going for MicroStrategy. It was down about 0.85% on the open, and I was like, I'm just hitting this thing hard. So I got a long at 950 for 602.95. I was like, all right, I'm making this core position because I think this thing could really move. When I look at the opportunity here, I'm like, okay, yeah, maybe this thing was just a flash in the pan rally and maybe it just comes right back down. In that case, I would just take a manageable loss, maybe like a 10% loss in this position or whatever. But could MicroStrategy get back to all-time highs? Could it get back to 1,200 over the next year or so? I think that's in the realm of possibility. That's not me saying it's going to, or like I'm predicting that. But in terms of a risk-reward opportunity, this to me right now is probably like the best one. So I got long early in the morning, and right away my entry went into the money. We got some nice green price action. So then I added to that position later in the day. Yeah, I added to my MicroStrategy common shares for 623. And I put now my second largest position behind ETH. Put my average cost there. So yeah, I'm very long MicroStrategy. And another cool thing about MicroStrategy is when you look at this, I think there's a lot of galaxy brain macro heads that they're like, well, first of all, cryptocurrency is a Ponzi scam and that is going to zero and MicroStrategy is going to blow up when that happens. Because, they can definitely predict the future. The short float is 22.87%, and the share float is so low. This can't be right. Only 7.78 million shares outstanding. There's no way that's right. But regardless, that's like one of the lowest I've ever seen. So this thing, that's how you get in this stock. Like, how did this stock get all the way up to 1,300? That's how. The float is so low. If people start going after this thing, it really moves. So I was like, I'm positioning in this bad boy just in case crypto surprises people, and then just in case all of a sudden everybody's like, oh, MicroStrategy. So we'll see. Yeah, short float is very high. So then let's move over to these other trades here. So I had some Airbnb call spreads on, and this Airbnb call spread came in so clutch for me, and this allowed me to be positive on the trading session today. Airbnb, this name as well. Take a look here. Airbnb. And I'm doing this video a little bit later today, so my apologies. But yeah, Airbnb, I've been trading this one actively from down here in the low 130s, and I've just been sticking with this name. It continues to act well. I have the 150 by 160 July call spread. So now that call spread is right in contention. So we'll see. I took off 10% of my position. I was like, I got to scale off a little piece. So I scaled off a little piece for $4.17. I paid $3.48. Then I tried a day trade in DocuSign. This is one where I'd been long DocuSign. I pulled off an over 100% winner yesterday in this name. So I figured, let me try for a day trade. I'll get long. Got long for $7.75. DocuSign today, I still think this price pattern looks really strong, but I intended this one to be a day trade. We closed lower than where I purchased, so I did close this one out, just really for prudence. But would I be surprised if DocuSign gaps up tomorrow and, it just, continues on its advance? Not really either. So I stopped out of this one. Where is this? See, I stopped out for 660, I'd paid 775. So yeah, took a shot on that one, pulled it in at the end of the day when that shot did not really work. Then what else did I do? I also closed out. I had some FXI 48 strike January 2022 calls. I put those on maybe like a month or two ago because I think at some point later in the year, these Chinese equities are going to turn around. I actually closed that one out as well. So I closed this one out for 161. I had paid 272. And I put here, I think this trade will work by year end, but the opportunity in some of these cryptos right now is too compelling to have my money in a trade that isn't currently in favor like this. So yeah, this is a classic example right here of the opportunity cost of capital. FXI, do I think if I held that trade till later in the year, it would probably go in the money at some point? I think so. But it's just, Chinese equities are not looking good right now. So I don't want to stay in them. See, I pulled that one in as well. So yeah, now heading into tomorrow, I feel pretty good with where I'm at in terms of positioning. I didn't come into today like ridiculously long with leverage, so today wasn't a problem for me. And yeah, we'll have to see what tomorrow brings. Let's pull up real quick some options. Order flow here. We'll go to our TradeScape. Yeah, let's take a look at what we had. See if anything really sticks out. Shopify. This one, I'm going to leave you off with this because this video is a little long and I think this is the only one you need to see. Shopify. This name was another one that showed relative strength, up 1.11%. This name bucked the trend in the growth stocks and closed positive. Shopify. They announced a partnership with Google and Facebook today to use their e-commerce checkout platform. You know, Google and Facebook are going to be using it. So to me, that's like you have a super powerful e-commerce company teaming up with two of the biggest tech monopolies in the world. To me, that's huge. So I like this Shopify, and it looks like there were players that were positioning in call options. Yeah, let's pull this up. I just want to see which contracts they bought. And then from there, we can wrap up for the day. And I'm not sure if you noticed, there's like a little difference in my videos, like the way you see me. I invested in some lights for my setup, so you can't see them, but they're in front of me right now. I like this setup so much better, and it just brightens everything up. It's pretty random, but here we go. There it is. Sorry about that. So Shopify. Oh my gosh, yes, they bought out to 2022. These guys bought out to 2023. Yeah, these are short term. July, more 2022. So yeah, this to me, October. These players, they understand. Yeah, this is a, this is a good company. This is one where like you can just kind of like set it and forget it. And I think Shopify's been that way for a long, long time. But that about does it for this market recap video. Hope you all had an awesome trading day. Everyone, buckle up for FOMC. You never know what FOMC can bring. Sometimes it's just happy path. Market goes so smoothly, and we just transition right off it. Boom. Other times it can cause, even like a little market correction. So as always, we're going to have to see what the river brings. Hope you all enjoyed this video. If you did enjoy it and you want to see more of this analysis, definitely consider becoming a member of the Pristine Capital trading community. Feel free to sign up over here. If you're interested in a free trial, feel free to reach out to me as well. Hope you all have an awesome rest of your day. I am out.